Hi everyone. So we're going to start within the next sort of minute or so. We're just waiting for a few people to join. This is going to be quite a popular one today. So we've got about another minute or so, guys, and then we'll start. Today, we've had a huge amount of inquiries in regards to this particular subject. So it just shows you, obviously, this is something that's on the edge of everyone's lips, because not only is it a case of we've had a large number of inquiries, but the webinar is extremely popular as well. Obviously, half the reason is probably because quite a few of you are at home working rather than actually in the office. But there's obviously a big interest in regards to this particular subject and how it's going to affect you all personally. To give you an example of how many inquiries that we typically get anywhere between 900 to 1,000 a month in regards to new inquiries coming in for property in the UK. Over the last 3 weeks, we've had close to 3,000. So it's a huge increase. There's two types of client who are asking the questions. Typically, the first type of client is someone who has already purchased, so they've actually made a purchase, and they're wondering how the pandemic is going to affect them. So they're wondering what's going to happen to the price of their property. The second type of client is someone who's been looking to make an investment, and they don't know whether to wait a month, 3 months, 6 months, a year, because let's be realistic, it's an unknown quantity at the moment, and they don't know whether to wait. But that's what I would say to them. That's any type of investment. When you ever invest in the stock market or gold or bonds, whatever it is, it's always the same thing. It's always, do I wait? Because the question on everyone's lips is, do I wait and can I get the same product cheaper? That's it. So can I get the same product cheaper? Well, the reality is unless you're going to flip short term, no one gets in at the bottom and no one gets out at the top. So unless you're looking to flip short term, or are you a day trader, which the majority of people on the call won't be day trading, then do you know what the reality is? It doesn't matter. But we're going to head into this into more depth. For those of you who regularly follow our blogs and our articles, you'll know that the state of property is always medium to long term. We never ever advise property for the short term. We do have a lot of clients come to us with ideas that they're going to go to an auction, buy at an auction and flip, but you won't beat a builder. The reality is, we always say to people, you've got builders who can do the same job as you for half the price. So if you've got a property that's probably 120 grand on the market value, but you can go and get it from an auction of 100, and it's going to cost you £10,000 to do up, therefore you'll make 10,000. A builder can go in and they can go and bid 105 because they can go and do the job for half the price than what you can. So what we always say to people is, forget these ideas of quick flipping, especially with stamp duty now. Those days are pretty much done. Where you want to be making your money is just your long-term income and your long-term gains. Of course, there are still below market value opportunities to be had if you use the right agents. Again, we've got a number of opportunities that we always get below market value, but we're not the only agents out there. There are a lot of good agents who can provide the same. But what we say is, just don't go to a traditional high street agent. You're going to get a traditional residential property. You're going to make your 4.5%, but that's it. You're not going to sort of set the world alight with 15, 20% below market value properties. But anyway, back to the question in hand, is what we are saying to people is that first things first is this particular situation that we find ourselves in, it's got to be short term. It can't, if it's going to be a long-term issue, then we're going to have some bigger issues than people worrying about whether to get into property or not. But the reality is as we've seen over the years, whether we've seen with the SARS, the Ebola, epidemic, and whatever we've seen through history, you go back hundreds of years, and you go back to 200 million people dying from the Spanish flu, it was still something that as a race we got over. So pretty much we can say that this will come to an end at some point. So we then have to look at, well, what happens then? So let's go on to the first client. The first client who came in, and they will be asking, well, actually, what do I do now? My property, how's it going to be affected now? Well, it's really largely irrelevant. The only time you ever need to know the price of your property or worry about the price of your property is when you want to either sell it or remortgage it. Up until then, the price has no bearing on your investment, because you're getting an income. You are getting a regular income that comes in suddenly because you've got the coronavirus, or the globe has got a coronavirus. It's not really going to have any impact on the fact that you're getting your income. Your tenant still needs to pay rent. And actually, there's been news which, if clients have renters in their property who are struggling, there's going to be help from the government. But again, this goes back to something we always say as well. You're better to buy a better quality property. A better quality property gets you better quality tenants. It means that you're unlikely to get the tenants that are going to struggle during these particular times. If you buy cheaper properties, and we get this a lot, people have got 200,000 and they want to go and buy £50,000 terraced houses on the outskirts of Liverpool and places like that, then you get a certain type of tenant who will be struggling in this particular climate. Therefore, what we say is actually you're better to get one or maybe even two, but probably one property for that price. You get a higher class of tenant, they're more likely to have a more stable job. Therefore, the reality is that how this affects the price now, if you've already got a property, is pretty much irrelevant. Because if you're not selling now, you're not going to worry about what the actual price of the property is. So in answer to any clients of you out there who have got a property and you're worried about what's happening to the price, if you're not selling it now, don't worry about it. The reality is you're still getting your income. You've got no problem at all. Then we head over to client two. Now, client two turns around and they're looking to buy a property. So client two is a little bit more tricky to answer. They're looking to purchase a property. So the answer, or the big question on their lips is, am I going to get this property cheaper in 6 months, a year, or whenever this thing starts to die out? So what we have to do is we now have to have a number of things to consider. Now, whenever I make an investment personally, I always look at the downside. So what's the downside of my particular investment, and can I cope with that downside? So if we go back in history, we've seen the FTSE market, the FTSE stock market, sorry, fall by sort of 50 odd %. We go back to 99 to 2000 in a really short space of time. We head to 2008, 2009, it fell then dramatically as well. And if we head to the last 3 or 4 weeks, we're looking 35% down. Spoke with a client last week. They have a pension, and they've said that they've literally taken out 70 to 80,000 pounds of their pension within a few weeks. Now they're in a fortunate position where they're not in the need to liquidate that pension at the moment, but it just shows how quickly the FTSE can fall. Now, when we head to the property market, what we have to look for is, well, actually, with the stock market and you have a fall, that's a rapid fall. It doesn't happen like that in the property market. The worst that I've ever been involved in, as I say, we've had times in the late 80s, early 90s. I wasn't involved in the property market then, but we've had bad times then when interest rates were at an all-time high. But the 2008 to 2009 crisis, we actually only saw 15 to 18% fall in the property prices, but that was actually over a longer period of time. It takes longer for these kind of things to impact the property market. But one thing that we always say, and for those of you that talk to us on a regular basis, you'll know that actually there's 3 fundamentals that we always look for long-term gains or long-term devaluations in the property market. They are taxation, legislation, and mortgage rates, and ease of those mortgage rates, ease of mortgages to get. So, for example, excuse me, if you get taxation, which, for example, stamp duty is a form of that taxation, or when they took away the actual relief on the interest, your mortgage interest, that's a taxation, so that will affect the property market. If we suddenly saw interest rates spiral to 5–10%, suddenly that would dramatically impact the property market. If we suddenly saw the fact that clients couldn't obtain mortgages due to a different type of legislation, again, that would affect the property market. But everything else is actually a minor blip. Now, you've got to look back and think, well, actually, over the last 20 years, we've seen 9/11, we've seen the Second Gulf War, we've seen the financial crisis, we've seen 7/7, we've seen Brexit, and we've seen the coronavirus. Now, we've still only seen, through all of that time, we've only seen one property dip, and the rest has been pretty much an upward trend. So we always say, look at the fundamentals. Don't look at the short-term blips. Look at the fundamentals. But also, one big thing that we have to take into consideration is what's happening if the property market fell. Let's say, for argument's sake, the property market did fall by 10%. Let's say over the next 12 months it fell by 10%. A lot of clients will automatically think, well, I'm not going to buy now. I'm going to wait for a year. I'm going to wait for a year and save my 10%. However, what we then have to look at, we have to go a little bit deeper and actually say, well, actually, is that reality? Is it a straight answer as, well, it falls by 10%, I'm saving 10%? And the answer is no. So there's a few variables we have to consider. So first of all, what are the downsides going to be? So if you have a property that's £200,000 and it falls 10% over 12 months, well, you will go and pick that particular property up for 180,000. For ease of use, but 180,000. However, let's take an overseas buyer. There are a lot of overseas buyers on this particular webinar at the moment. Two things that you have to think about is, first of all, taxation, so stamp duty. So if you buy now and over buying in 12 months time or 13 months time, you are going to be saving 2%. So first of all, you will have a 2% saving by buying now, because in 12 months time, you are going to pay an extra 2% stamp duty. So out of that 10% that you've saved, actually you've only saved 8%, because you're going to have to pay an extra 2%. So that's one thing. So suddenly you're not saving 10%, you're saving 8%. Then on top of that, you've got to take into consideration the exchange rate. We have got the lowest exchange rate since 1985. So for everyone who's got their money in anything other than the pound at the moment, you're winning. So what you've got to do is look at the fact that actually you're probably getting UK property at some of its lowest prices for a long, long time. So we had a big influx of clients as soon as Brexit was announced, as soon as the vote was done and Brexit was announced, the pound got weaker. We had a big influx of overseas investors. Well, actually, if I was an overseas investor and I had all my money in another currency, I would be putting my money into the pound at the moment, because it's weak. So you're getting a lot of pound for your currency. Therefore, you're probably saving a good 4 to 5% on that as well. So actually, you might think you're saving 10% on the property price, but you're costing yourself 2% stamp duty and probably 4 to 5% with what the pound could rebound over the next 12 months as well. So actually, in real terms, you might work out that actually you're only saving 3% overall. And then on top of that, you've got to look at, well, what would you get if you were letting that property out now? So if you did have that property, you would actually still be getting the income. So let's go around figures and say you're going to get 5% income on your property. So far, by not buying a property, you've cost yourself 5% income, you've cost yourself 5% exchange rate fluctuations, and you've cost yourself 2% in terms of stamp duty. So you've saved 10% on the property price, but you've cost yourself 12% in terms of what you didn't have. So the reality is that you've got to look at the worst case scenario. What do you think the property price could actually fall by, knowing that the worst crisis we've ever had, and that was the fundamental financial crisis, it only fell by 18%. What's the worst thing that can happen with a short-term blip? And this coronavirus isn't a fundamental that will change the prices of property. It will affect people's confidence, 100%, but it won't change the fundamentals. So the reality is that, even if you said it could dip by 10%, if you're an overseas investor, you would still be better off buying now, because you would have the income, you would have the benefit of the exchange rate, and you would also have the benefit of not paying the extra stamp duty levy, which is due to come in April next year. So that's one thing I would say for an overseas investor's perspective. Now, if you're a UK investor, it's slightly different. You don't have the advantage of having your money in an overseas currency. Well, the majority don't anyway. And the other side is that we, as a UK investor, we're not going to have to pay the extra 2% levy. So we then have to look at what we would miss out on. So as a UK investor, you would miss out on your 5% income straight away. So therefore, you'd be theoretically still 5% down. However, what you've also got to look at is, what if it didn't dip by 10%? What if actually we don't see this dip of 10%, and actually it starts to trickle up by 1 or 2%? Well, you're going to cost yourself money anyway. And the reality is like I say, you're never going to get in at the bottom. People that want to get in at the bottom, you should have bought 10 years ago. You should have bought in 2010, 2011, but you didn't. So the reality is that people will never get in at the bottom and never get out the top. You should be looking at this as a 5 to 10 year plan minimum, in my opinion. This is people, you're buying property not for a quick flip, as I say, you're buying it for a medium to longer term. So the reality is that overseas investors, even if it did dip by 10%, you'd still be 2% down if you didn't buy now. And for UK investors, okay, if you didn't buy now, if you bought now, sorry, and it did dip 10%, you would be 5% down. But the reality is, I just genuinely don't think the fundamentals are there for it to dip. We've also got to look to the fact. We've also got to look to the fact that actually, what's actually happening now is people need quality properties more than ever. The coronavirus doesn't mean people don't need property anymore. What actually people are realizing is they're going home and they're in their properties more than ever, and they actually realize the faults. And we always get a big influx of inquiries over Christmas time where people spend a lot of time in their property and they realize actually it's not up to scratch or it's not where they want it to be. And at this time as well, what we're seeing is a real lack of shifting. We have a lack of shifting in residential properties, because what we're having is, if people are nervous about the coronavirus, what we're seeing is a lot of people don't want to get valuations done. People don't want to go around houses and do viewings, and people don't want to host viewings either. Let them go in and see in a house. People don't want to actually host other people coming in their property. So what we're seeing is a lack of movement in the residential market. Now that impacts the rental market, because what happens is typically as the residential market moves up, investors go and buy what would typically be classed as a first-time property, your one studios, your one bed, your two beds, first-time properties, and they rent to that particular market. But if no one's moving out of those first-time properties, there's even a bigger case of rental demand, because renters don't dry up. As school, university years finish, people will need to live somewhere. So as university finishes, and for example, in Manchester, you have a 55% retention rate where 55% of the graduates remain in Manchester. That puts a huge demand on the rental property. If the rental properties aren't there because people aren't moving out of them, then the reality is what's going to happen? Well, that actually gives landlords a better chance. Is they can actually put up their prices and they can go to the person that pays the most. So actually, I feel we're going to see a higher rental demand over the next 6 months, especially come sort of June, July time when people do start to leave university. And I think that it's going to give rise to a type of tenant who actually was willing to pay more for the same particular property. So there's going to be a bigger demand, in my opinion, for rental properties, because that particular side of the market isn't shifting. So what you have to look at as well are mortgage costs. Now, one thing that you can look at here in the UK is if you're getting a mortgage now, over in 12 months' time, you could potentially be saving 0.5% to 1% on your mortgage, because mortgage rates are at an all-time low. I spoke to a mortgage broker at Lloyd's this morning. He said that they've already factored in the 0.5% interest rate that the Bank of England slashed a week or two ago. So therefore, once this pandemic is over, it's more than likely that the Bank of England will put interest rates back up to where they were, because this was an emergency rate cut. It wasn't done as normal. It's an emergency rate cut, and banks will follow suit. So actually, you've got your 5% income that you would be making, but you're also, if you can tie yourself into a 2 or a 5 year mortgage now, and you're saving, let's say you're saving 0.5%, for example, on your mortgage, and you tie that in for 5 years, well, that's actually 2.5% that you've factored in, that you've saved there as well. So you've got your 5% saving and your 2.5%. So actually, even if it fell by 10%, you've only cost yourself 2.5%. But as I said before, I just genuinely don't think it's going to be falling. So as I say, there's a potentially 9.5% that you're going to be losing out anyway. And as I say, the overseas investors, they've got the stamp duty on there. But say one thing that we've looked at as well recently is the fact that you've got a great exchange rate, lowest since 1985. So all in all, I see that we're still positive in regards to the property market. I don't see that you're going to be saving anything by or any substantial amount by investing in 3 months, 6 months, 12 months time. I feel that actually what's going to happen is there's more demand on property. We're not suddenly having a mass exodus of people where there's more properties freed up. In actual fact, there's less properties available. Everyone is staying at home, and that part of the market isn't shifting. So what I would actually say is I'd take a serious look about what you're looking to do personally. If you have a property already, you've got nothing to worry about. You're not looking to sell it. It doesn't matter. If you are looking to make a decision and buy, well, actually, you've got to look at what could your maximum downside be. So if the property market did fall, what is your maximum downside anyway? The reality is if we've just gone through, it isn't that much. But also look at the fact that what are people doing? What all these people that have had money in the FTSE and sold their portfolio, and that's the reason why it's gone down. The market doesn't go down because nothing happens. The market goes down because people are selling. So if no one sold, the stock market doesn't go down. People are selling, so therefore there is more money. There is a lot more money to be had in the actual in their savings accounts. You're not making any money in the savings. So therefore, people then look for safe havens, property and gold. Now, a lot of people, a lot of governments are selling gold to prop things up. So actually, a lot of people are turning to property. Hence why we're getting a huge amount of inquiries in regards to this. We've actually probably had our best 2 consecutive months that we've had for the last, I'd say, 3.5 years. So the reality is, if people are still buying property, that's only going to put more demand, and more demand pushes the price up. So I think people need to look at actually what are they going to do with their money. If you just keep it in savings rates and you're making 0.25%, you're literally losing money. With inflation where it is, you're losing money. So my advice would be to, whether you invest in property or gold, whatever it may be, you need to do something with it. FTSE for me is so volatile, it's frightening how much it's falling in the last sort of 3 weeks. So therefore, of course, we're in the market, we feel comfortable with property, but I think that even if you took the very worst case scenario, there's not really too much to worry about. And I personally think that we're going to start to see things increase. So, as I said before, the main fundamentals are taxation, legislation, and mortgage rates. And actually, that's actually got better. Mortgage rates have fallen, and it's still the same ease of obtaining a mortgage now as it was 3 months ago. No problem there. Recent impact on property prices, despite 9/11, the Gulf War 2003, elections, Brexit, coronavirus, actually they've got nothing to do with actually the 2 main recessions that we had in regards to the properties, which was the late 80s, early 90s, and 2008. So I personally see, as I mentioned, I see properties still rising. We're never going to go back to the rate where they're rising 10, 15% a year. That's been done. I still get questions. Are we going to still see that? No. That's 2011 and 12, 13. That's been done. But I still see a nice steady rise. There's still a huge demand on property. It's going to affect renters because there is less property to rent as people don't shift the properties on. Taxation, as I say, I actually see taxation easing, that they need to do some short-term taxation eases. And mortgages at an all-time low. And as I say, there's always going to be investors. People are always looking for an investment. And with the FTSE fluctuating where it is, as I say, personally, people are looking at safe havens at times like this. So over to you guys. Now, there may be quite a lot of questions. We've had a huge amount of attendees on this one. So you should have, guys, I say it same every time. I don't know what screen you see is either a speech bubble or a question mark. But if you want to type in your questions, I'll look to answer. So let's have a look. First one here. How is the virus affecting building companies who are relying on investments to continue their projects? Well, good question. Personally, if you're buying a product or a property where the developer is relying on the investors, you shouldn't be buying it. The reality is that what you want to make sure is that you've got building companies who already have the funding in place. If they don't have their funding in place, and a lot of companies do this, and they rely on the investors to invest, therefore pay for the build, you are chancing your arm and you're risking it at the start. There are a number of companies out there, and they do what's called stage payments, where you pay 20%, then 20% upon structure, 20% on roof, 20% on internals, and so on. They're using your money to build. Now, that's always something which we don't advise. We look to get already companies who have already got funding in place, and with all the respect in the world, a mortgage company is going to do far more due diligence than you guys as investors, because you're investing maybe 100, 200, 300,000. A mortgage company is putting 10 to 20 million in. Therefore, their due diligence on the builders, on the site, on the scheme, is going to be far stricter and far stronger than what you guys can do. So they won't lend on a scheme where they just don't see it working. So they will get all their facts and figures. It will be stress tested to the max. So in terms of the virus affecting building companies, their funding's already in place. So they will continue with their projects regardless of whether they sell 1, 10, 100, 50 units. Sometimes a company needs a certain amount of units to release that funding, so that does need to be looked at. But as I say, on the whole, the building companies won't be impacted by investors. Where they will be impacted is by supply of materials. So we probably will see delays. That's the reality. We will probably see delays, but I don't think that we're going to have any problem with builders building out. The builders that will always face problems are ones that just don't have the funding. I've got a question here. Hi, is the audio on? And I'm unable to hear anything. I hope it is, guys, or I've been speaking to myself for half an hour. So yeah, I'm pretty sure it's on. If someone could send a question saying that it is on, that'd be great. Do you have a percentage of finished tenanted properties in Liverpool compared to the total number of properties on the market which are unfinished? No, I don't. Apologies. To get that would be just a minefield. I mean, we can get our own percentage in terms of what we have, but in regards to, I've just had a text say audio's on, so thank you. Yeah, I can get a percentage of finished tenanted properties that we have, but not in terms of generally the total on the market. That'd be impossible to get. I'm in between, I've got one here. I'm in between a transaction with offer accepted and exchange and completion set for the 28th of March. There is no demand for rental and not likely to change for the short term. Should I be cancelling the transaction, asking for a price reduction? Apologies, I don't quite understand the part where you said there is no demand for rental and not likely to change. The only thing I can think you mean there is no one wants to rent your property. If that's what you mean, could you just clarify that, and I'll come back to that question. Surely, if universities are closed, students won't be able to be graduating this year. Re your comment about summer demand for rental property. Yes, but they will potentially, they're not going to close and just close their doors to new students. They're going to more than likely still let students in. The chances of this continuing for another 6 months, where universities accept no one for the next academic year, they've already come out and said they may postpone exams for a month or 6 weeks this morning, and I do believe that they'll postpone sort of GCSEs, A levels, which will of course have a knock-on effect, and then we'll have to work at things. We'll basically have to work at things from there. But I don't see, I can't see it stopping to where they suddenly just say, well, actually, we're gonna wipe an academic year away. Even if they did, let's go worst case. Let's say that they did take away a whole academic year. Therefore, there's no new entries into university next year at all, and there's no graduations this year at all. Well, there's still a demand to rent. It's not just people from university that will come out and rent. There's still a huge demand from rent from workers. There will still be an increase. It might not be as dramatic as it would if graduates graduated, but again, I can't see that happening. I can't see how that they can put it on hold for 12 months. But again, as I say, we're in uncharted territories. But there will still be a demand for rent, even if we took worst case scenario and universities closed for the next year. What are your thoughts about off-plan risk to construction progress delays? Yeah, going back to what I sort of answered before, my thoughts are I don't think we're going to see any issue with developers that have got funding. I do think there are going to be delays because a lot of stuff comes from overseas. I think there's going to be a short-term stop, probably 2-3 months on sort of big shipping containers coming in, and then there'll be a catch-up after that. So I do think there'll be delays. So don't be surprised if it gets announced that there will be slight delays. But I don't think we're going to have any issue as long as you've got a good quality developer and the funding's already in place. Not a problem at all. And a lot of since Brexit actually, a lot of developers are using homegrown materials. They're using materials where actually they're being produced in the UK. This was something that was already thought of because, you know, the pound was very weak. Well, it was weak, you know, over the last few months. It has got weaker. So a lot of developers put in place, well, actually, we can't keep buying materials from Europe or China because actually we're paying more for them than we were 2-3 years ago. So they're actually looking for more sort of UK-based materials, and that's actually benefiting the economy and actually a benefit time frame. So yeah, as long as you've got a good developer with the funding in place, don't think you have a problem. Let's have a look. 1-bed flat. Okay, this goes back to the other question. So let's go back to the other question. I'm in between a transaction with offer accepted and exchange completion set for the 28th of March. There is no demand for rental or not like to change for the short term. Should I be cancelling the transaction or asking for a price reduction? And then the next bit is, this is for a 1-bed flat, excuse me, in Manchester city centre. There are a number of like-for-like properties since the outbreak being listed at 5 to 10% less, around 185 to 190k. Again, I genuinely, I wouldn't worry. You know, you're never going to get in at the bottom and out the top, as I said. If you were happy with your property when you initially bought it a month or 2 months ago, you should still be happy with it now. It will rent. You're not going to have, as I say, an exodus of people from Manchester. You're in the city centre. I don't think you can have any problem whatsoever. What if the funding that the builders already have goes dry because of the financial crisis? Well, good question. Well, the fact is that the funders, if they've already committed, they're not going to bow halfway through, because actually they will just dramatically lose out. When we go back to the 2008 crisis, the funding was actually withdrawn for the people that couldn't afford to pay it back. And then that's what had a knock on that, you know, the subprime, and they couldn't afford to pay it back. And then when you started having people hand back their keys because actually they were in negative equity due to the interest rate increase, well, actually that was what really caused it. It wasn't that suddenly builders didn't have the money to complete. Builders went bust because no one was buying their properties. And what happened is builders were building. They paid back their loan. Sorry, they borrowed, they built, and they had no one to buy their properties because the mortgage rates were so high that actually people said, well, I don't need to buy the property. So that's why builders went bust, but they still built, and that's why the properties went into the hands of the banks. But with the interest rates where they are, and the fact that the people are still buying, and the fact that mortgages have got stricter, and we don't see that those subprime that they were called in America, we don't see those particular clients. In the UK, you used to be able to self-certify, where you're self-employed and you could say, yeah, well, this is what I earn, this is what I can borrow, and you would get a mortgage on the back of it. It was so loose, but they don't have that. So no, I don't see that a bank would be halfway through lending on a 10 million bill. There'd be 5 million short, and suddenly say, well, we're not lending you anymore, because actually the developer will be like, well, we can't lend, and therefore the bank's lost its 5 million. So no, I don't see that happening. I refurbish a property which has been on the market for 4 weeks. Would you keep it on the market or put it out to rent? I'll do both. Personally, I would rent it. so you're getting an income, and I'd put it on the market as well, and try and sell to investor. I would see if you can get maybe some short-term renters, so the person that's buying your particular property has got options. For example, some renters out there will be happy to rent for 3 months. They don't always want a 12-month contract. So if they rent for 3 months, the person that's buying your property can either carry on renting to them as an investor, or if it's a residential client, then by the time that they've gone through the process for 3 months, that particular tenant would have left and they would have your property. So I would personally do both. With the virus negatively impacting properties purchased offline and are due for completion in the coming few, will the virus negatively impact properties being purchased off plan? I think you mean there, for the coming few months. Again, no, I don't think it will. I think that off plan properties that are sort of 12 to 18 months away, then this is a blip. Again, it's a major thing that is in the papers every day. But I think if we drill down to it and we look at the cold hard facts, and we look at things like tens of thousands of people a year die from flu who are vulnerable, I think if we're all sensible and the governments around the globe take action, I genuinely don't see that we're going to have any kind of long-term problem. Will buy-to-let properties be affected in Manchester? Again, the demand is still there. We've sold a huge amount in Manchester this month, along with Liverpool. Manchester won't be affected any more than London, Liverpool, Leeds, Sheffield, all over. So no, I genuinely don't. I think that you've got again, this is one reason why we always say buy city centre, is because you've got more stability in city centres and more demand in city centres than you do on the outskirts. So no, I genuinely don't think that we will see that. The stamp duty will rise from 3 to 5%. When exactly? Okay, it's not going exactly from 3 to 5%. It's an extra 2% per bracket, and it's due to come in April 2021 for overseas investors. They've got to clarify a number of things. We're in talks with a number of lawyers at the moment to be able to circumnavigate that by buying through limited companies. But they are looking to put an extra 2% on every single bracket, April 2021. I'm due to exchange this week. Shall I postpone? No, as I said, I wouldn't. I can't see that it's going to benefit you in any way, shape or form. If this was a financial crisis where we had major issues with liquidity, where we had huge issues with people who have got mortgages in the past few years who shouldn't have, like we had in 2008, 2009, definitely, I would say we're in a totally different ballgame. And I would say probably, yeah, postpone. But we're not. What you've got to look at is, let's say, for argument's sake, there was a vaccine tomorrow. Let's say that there was a vaccine tomorrow for the coronavirus, and all this went away overnight. The reality is everyone goes back to work as per normal. Liquidity is the same as it was. And actually, all that's changed is perception. The fundamentals haven't changed. All that's changed is perception. People are more nervous about things and what's going to happen. I do understand there will be businesses like, for example, retail, whether it be coffee shops, restaurants, who are suffering for this. But I still feel that the property market, people still need places to put their money. And actually, it's smart investors who invest during the turbulent times, because after the turbulent times, things start to move up. So no, I really genuinely don't think that you need to postpone. Do I think the property house price index will go up? Are property investors who have invested in property funds likely to make gains? Is property a safe haven investment as opposed to equities and bonds? Well, look, again, I think that you only have to look online to see what happened historically. Are you likely to lose 35% in 3 weeks on a property? Again, I'm sure the majority of you know the answer to that. Are you likely to lose 50% within a short period of time on property? There is a flip side. Can you make 50% in 3 weeks on a property as well? Well, the answer is no. But again, I think if you're concerned about the roller coaster ride that we're seeing on the FTSE at the moment, then personally I think that clients should be investing in property. But again, it has to come down to you. You guys then have to decide whether it's the right investment vehicle for you. If delays happen when the property, if delays happen, then the property can't be tenanted. So presumably it's better to buy something ready to rent. But again, it depends on you. When you buy property off plan, you essentially are buying something for 15 to 20% below market value. So what you're doing is there's a trade-off. You're working out, well, actually, if I'm earning 5 to 6% a year on a property, and actually this property is 20% below market value and it's only 18 months away, well, you're probably better to buy off plan, because actually you won't be able to get 20% income within 18 months. Again, it really depends on what you've got to do. Is you've got to say, right, how much am I saving on this particular property within a period of however long it takes to build. So if it's a 2-year period and I'm saving 5% for argument's sake, then it's probably better to go and get something ready now, because you can earn probably 10% income. However, if you're saving 20% over a 2-year period, well, then you're probably better to wait, because you're not going to get 10% a year on a regular buy-to-let. Short term you can, but not on a regular buy-to-let. So again, without actually seeing the individual parameters of the property, it's pretty tough to say. Clarification in regards to no rental demand. There appears to be no movement in the rental market. Properties in the same development have been on the market for weeks, or reduced price still in the market. Spoken to agents who advised to drop price by 100, 150. Okay, well, what you could do is, I'm going to send everyone here my email address. And what you can do, guys, is any questions, because it's very difficult without knowing the specifics of your particular property. If I'm honest with you, I can't comment. I don't know. What I would say is it's unlikely that this is going to be a long-term thing. The virus hasn't just suddenly impacted the fact that people don't want to rent property. It hasn't. It would make no difference whether someone wants to rent property or not. People still need property to live in. The virus has not impacted that at all. It could be the fact that you bought the property, it's only just come on the market with another 50 or 100 in that particular block. Therefore, it's going to take time to rent it out. But again, I am just guessing, if I'm honest with you. But as I say, feel free to contact me on that email that I just sent through, and then we can I can go into a bit more detail in regards to your particular property. So look, will the virus reduce the property prices? The economic activities will reduce, schools are closed, demand for rental properties are low. Can buyers, investors benefit from the reduction? Why would, again, I always go at the same thing. Why would the demand for rental properties be lower now than it was 3 or 4 weeks ago? It's no different. In actual fact, when people are at home, and this is what I go back to at the beginning, when people are at home and they're with all the kids at home, they actually see, and if you're a renter and you actually see that actually you need more space because all your kids around you need more space, actually it puts more of a demand on. And also what's going to happen, you know, the population is still increasing. Nothing's changed. You don't stop the demand. There's still going to be renters who need to rent, because the renters who need to rent, where are they living now? There must be a reason why 3-4 weeks ago they were looking to rent, or 2 months ago they were looking to rent. Maybe they didn't have a property. Maybe their landlord was selling. Maybe that they have a child on the way, so they need to go to a bigger property. I just don't see it happening. Of course, take your chance. If you're in the process of buying something now, what's the harm of going asking the developer if they're going to reduce? But I just don't see it happen. I think that as long as you've got a great price development at the start, it makes no difference. What happens if the deposit is not possible to go to completion next year? Can we claim back in case of global recession? So what happens to deposit if it's not possible to do completion next year? Excuse me. I can only answer that. What I think you're saying there is, what happens to your deposit if the developer doesn't complete? Again, I don't know. It depends on the contracts of your development. For example, does your development have a warranty in place or insurance? So for example, typically a developer will have a warranty for 10% in place. Therefore, if they don't complete or it goes past the long stop date, you can claim that back. It all depends on the contract. That's probably one specifically that's related to the contract, and then I would also advise go back to your solicitor on that particular one. Do you feel some agents, not you in brackets, thanks, sell overpriced properties to overseas buyers, relying on slick marketing, particularly 60s office conversions? Do you see this as an emerging problem in the market? Well, a lot of 60s office conversions, they have issues anyway. They have issues with the type of build potentially, and therefore the mortgage side of things. I always say, look, the job of a sales agent is to sell the property. That's their job, and they're going to come out with the slickest marketing to sell you their product. And the reality is, marketing sells. But what I would always say is, we hope to differentiate ourselves. But again, you know, I'm not saying that we're the best agent out there, not at all. But we hope to differentiate ourselves and not only send you the marketing. We actually try not to send marketing out. We feel that you guys getting a brochure is pretty much a waste of time. You're never going to read a brochure and it have a negative in it. So I would actually say, you know what, the best thing to do is just compare, do a hard, cold, logical conversion. The property price that we offer or any agent offers you, what's something else going for in that development if it's ready now? If it's not ready now, what's something else going for in that particular area? That's what I would also I would always say. Even with this being short term, let's say 6 months, in worst case scenario, a void period of 6 months, that's a loss of about five grand. Can this be reflected in the price offered? But again, going back to a void period, why would you have a void period? I don't understand how the virus can affect you not getting rental. If it was a virus where everyone had to go and live in the park, therefore people didn't need property anymore, 100%, I'll be saying, yeah, you know what, you're going to struggle. But if everyone's being booted out of their offices and they need to be at home, everyone's going to need a property to stay in. I don't see why you would have any form of void period whatsoever. I'll tell you where there will be voids is, and one thing that we have to look at, again, we'll be transparent with our clients, is when you're doing short-term lets, there may be a dip in terms of the demand for short-term lets, because obviously people aren't going to concerts anymore and things like that, which is what short-term lets rely on. So maybe what we'll have to go and do is 3 to 6 month lets and then pick it back up after there. But in terms of a normal rental, no, I just can't see there being a dip in demand. How can we make sure that the developer has funding in place and secured? Good question. Speak to the agent. The agent, if the developer's got funding in place, they should be more than happy to show you that as a contract. There'll obviously be bits taken out, personal information taken out, but they'll be more than happy to say that. Don't just take an agent's word for it. Oh yeah, they've got funding. Get the funding contract, get the funding report. So for example, we've got a project in Liverpool at the moment. We didn't advise it until we'd seen the funding, but we know that developers got the funding, and we know that the bank therefore has done their due diligence. Thanks, I like the dual strategy, no problem. As an overseas investor, someone who's not a resident in the UK, we're British citizens working abroad and we have access to euros and sterling. Is an overseas investor someone who's not a resident in the UK? We are British citizens working abroad. Yeah, so good question. If you're British citizens, I think there's two questions that you might be asking there. First of all, as British citizens, you can pay the normal rate of UK stamp duty. You're a British citizen, even though you're abroad, you should be liable to be paying the lower rate of stamp duty because you're a UK citizen. So I think that's the first thing. However, the fact that you've got access to euros and sterling, the fact that the sterling's so weak at the moment, again, a lot of people are transferring their euros into sterling because it's so weak. Again, I don't know if I've answered your question, and apologies if I haven't, but feel free to ask another one if I haven't. Whilst we should all have the 5 to 10 year plan, some of us like the idea of flipping the development. Yeah, and you can still flip as long as you've got the development below market value in the first place. What I mean by traditional flipping is that there are a lot of clients out there that want to buy something that's ready now, they can do up and flip it. What I meant by those days are gone. It's those particular days of going to an auction, buying a cheap rundown property and doing it up and flipping it. You're never going to outbid a builder. They can do things cheaper than you, and you won't flip those. However, if you buy something that's off plan, massively below market value, 15-20%, of course you can flip those. But by flipping, that might be a longer term flip, such as a 12-month flip. What a lot of people do is they want a 1-month flip or a 2-month flip, where they go to an auction, do it up, and then flip. Those short-term flipping days are gone. But if you buy something off plan and you've got it enough below market value, yes, there's still the option of flipping there. Presumably it's better to look at a property which can be rented as homes rather than as Airbnb, since people are not moving around. Yeah, that's true. But what we tend to advise is, why don't you try and have both? Why don't you try and get a property that you can do both with, and then you've got the option of going forward. As I say, if you're going to have it 10 years, 5 years, however long it is, this will end. This issue that we've got at the moment. Excuse me, I keep coughing, and I don't have the virus, by the way, but in terms of this coronavirus, it's going to end. So what we look at is properties that you can potentially do both on, and then if you can, fantastic. You've got 2 options down the line. I've got a property that's gone up in value whilst being built. Is it fair to say that the option is unlikely over the next 12 months? If you're talking about flipping, again, I don't know if that's related to the flipping question, but if it is, no, it's fine. If it's gone up whilst being built, and it's gone up, dramatically enough, no, of course you can flip. We've got projects in Manchester where we got for we've got for 250,000, and they're now going for 300. No, of course you can flip those. We've got a project that we're actually selling now, where it's on the open market. Well, it's sold actually. It's sold for 249,000. So the last property sold last month for 249,000, and we're getting them straight from the developer for 200. They're well below market value. Even if the property market fell 20%, you'd still be you'd still be even. So again, they're the type of properties that we look to find. You're never going to find these on Rightmove or Zoopla. Hence why you use sort of companies like ourselves. Next one. A 3-month mortgage holiday for buy-to-let mortgages. What if a tenant can't prove and show that the loss of rental due to coronavirus? Will lenders request to see evidence of the tenant's inability to pay rent before they grant us landlords mortgage holiday? I'll be honest, I don't know. I'm really sorry. I don't know. What I'll do is, if you email me, I will find it out for you. That's something things are moving pretty rapid. So we are looking at a lot of the legislation that's coming in, because obviously we've got clients with mortgages. So if you just send me an email privately to the address that I gave you guys, then I will look into more details for you personally. But as I apologize, I don't know the answer to that just yet. If you were to ask for a discount on properties during this period, targeting motivated sellers to take advantage of the uncertainty, what plausible reasons would there be for getting a discount? I don't think you ever need to give a reason for a discount, if I'm honest with you. I think if you want a discount, you go and ask for it. I don't see that you ever need to explain your reason for a discount. If let's say a property is 200 and you want a discount, well, you just offer 180 or 190, and then it's up to the developer to say no. I don't think you need to say why you want a discount. Well, it's simple. You want a discount because you want to pay less. You want to make more money. I don't think there's anything shy about saying that. I don't think we should be afraid of saying we want to make more money. Therefore, I would say if you want a discount, you ask for it. It's then down to the developer to say yes or no, whether they're happy with that. So yeah, I think if you've got motivated sellers, of course, we'll always still going for a discount, guys. Don't get me wrong. We'll always be, pushing developers for as much as we can get. But typically, we've already done that before we've even started speaking to clients about development. We've already gone to the developer and pushed them down. We have, for example, we had 29 units in project in Manchester. As I say, the last one sold for 249,950. And we've already worked so hard over an 8-9 month period to get them for 200. So we've already done the job. So if anyone comes in now and says, well, I want that at 180, well, the answer is going to be no, because we've already discounted it from 250. But look, you never need an excuse to ask for a discount. If you want a discount, you ask. If you get it, great. If you don't, you don't. But what I also say, the same side, don't be offended if the developer says no. A lot of people take offence by not getting a discount. I actually had a client once, and no exaggeration, he asked for a discount, and the developer said no. And he kept coming back, and the developer kept saying no. And in the end, he said, I just want to feel I've got a discount. And he said, even if the developer gave me £1 off, I'd buy it. So I thought it was a joke, but he was being serious. So the developer did. They gave him £1 off, and he bought. And I think he just wanted the feeling of getting a discount. But the reality is, guys, you don't have to be afraid of asking for a discount. But if the answer is no, as I say, don't be annoyed about that. It's just that at least we've asked the question. Is there not a risk that many jobs will ultimately be lost, which will result in a downturn in the rental market, people moving back home with parents? Yeah, there is. The reality is that there is a chance that a lot of jobs will be lost. I think that if it goes on long term, yes, but I can't see it dragging on. Eventually the economy, the wheels have to turn. I don't see much in terms of people suddenly moving back with parents. Potentially if people have gone out from university and they're working in a retail sector. So let's say you've left university, you're renting at the moment, you work as a waiter, waitress, or a barista, something like that. That kind of industry will be affected. But the chances are that if you're working in that industry, you're probably not going to be renting a 1 or 2 bed flat. You might be renting a room. So I think that probably HMOs will suffer because of it. So I think that people that are renting rooms, that kind of tenant will suffer most definitely. But that's not the market we're aiming at. We're aiming at the young professional who has got decent, stable jobs, and more likely their company is going to be paying for them even while they're working from home. Don't forget, just because a lot of people are at home doesn't mean they're not working. It's the industries with the not working. For example, if you go into places like Starbucks, Pret, Costa, all of those places at the moment, you can't sit down. It's takeaway only. So I think jobs may suffer there, but I don't think that that's the market which our particular properties aim at. What sort of property would you be looking at to rent as Airbnb and short-term 3 to 6 month 1 or 2 bed apartments? Yeah, that's right. 1 or 2 bed apartments. I don't personally go for 3 bed apartments with Airbnb. 1 or 2 bed apartments, because you can also put a sofa bed in there. So if it's a 1 bed, you've got I always put 2 twins in there or a double, and then you've got the sofa bed in the main room. Alternatively, 2 bed, sleep 6. You can also have that as a residential as well. So yeah, that's spot on. Exactly what I'd be going for. Well, guys, I think that's all the questions. And as I say, you've all got my personal email. Feel free to send me an email. I can always put you in touch with any of the brokers as well. Hope you found it interesting and helpful. Appreciate you guys taking time out of your day. And most importantly, guys, hope you all stay safe. Hope all your families are well. And I say we get through this soon. And anything you guys need, just give us a shout anytime. Take care.